Hey, this is Jason Wright with the Smith Group, and this is your South County market update for October. If you're watching the news, you understand that the Feds raised the federal funds rate another 75 basis points earlier this past week. In that move, they're using this rate hike to combat inflation and out of control home prices and home appreciation growth. I think that in a market where you're seeing homes appreciate at 12 to 15, 18, and in some markets 20%, that just over the long period of time isn't sustainable for the economy. What you end up having is people who are first-time home buyers or getting into the marketplace at an introductory level that can't afford the housing. Their income doesn't keep up with the appreciation in housing. So the Feds obviously have a solution to that. Their solution is to, raise rates, make borrowing more, more unaffordable for consumers. And in that, they're going to slow down the demand. And by slowing down demand, you're going to have more inventory, and they're trying to balance the demand and the inventory. So that's kind of their plan. They specifically telegraphed what they want to do with interest rates going forward, which is they're going to push the interest rate up as high as they can until they can get the housing market inflation under control. So knowing that that is what's happening coming forward, how does that affect our local marketplace? Now, please keep in mind that when the Feds are raising the rate, they're looking at national data, and each marketplace is different to some extent, and each marketplace has its own factors that weigh in on supply and demand and pricing. So I want to take a look at the numbers in our South County marketplace and kind of just pick those apart and see what they mean based off of what's going on everywhere else. Okay, so let's take a look at the September market stats for our 5 cities in South Orange County. That would be Laguna Niguel, Ladera Ranch, San Juan Capistrano, Dana Point, and San Clemente. In September, Laguna Niguel had 20 active listings, which was down 1 from what we saw in August. Escrows, we had 25 new escrows, which is up 8 from what we had in August. Sales, 27, which was down 17 from what we saw the previous month. Ladera Ranch, 6 actives, which was down 1. 7 escrows, which was up 2. 18 sales, which was up 4. San Juan Capistrano, we had 20 actives, which was up 5. 13 escrows, which was up 11. And 22 sales, which is actually down 6, which shows a little bit of volatility in San Juan Capistrano. Dana Point, 11, which was up 4 in actives. Escrows, 16, which was down 10. And sales, 10, which was down 12 from the previous month. San Clemente, interestingly enough, had a pretty active market. It had 26 active listings, which was up 11 from August. Escrows were 27, which was up 16 from the previous month, and sales, 42 sales, which was up 10 from the month before that. As you can see, we kind of just have sales happening, we have inventory coming on the market, but we still have a healthy amount of escrows happening, which means we're kind of losing inventory. Inventory is being bought up on the market. We're not seeing a ton of new listings coming on. Very few pockets are seeing that. So we're kind of balancing out. And as we go towards the rest of the year, we're going to see inventory is going to kind of taper off. We were saying this last month. We're going to see demand kind of come down, especially with these rate hikes. And so what we're going to do is we're going to kind of come into this end of the year where we're not going to see a whole lot of activity. I think that the Feds are definitely constraining the marketplace, putting demand on the sideline, and what happens going forward with future rate hikes is really going to affect the housing market and put a very cool temperature on the activity that you're going to see. So what does all this mean looking ahead? Another thing that I thought was interesting with the Fed's interview was they kind of talked about what their long-term plan is, which is they want to combat inflation and they want to keep at this until they get inflation at bay. One of the things he said is that Jerome Powell said, is that they want to slow the market down to where you're seeing a healthy amount of appreciation. He also said to get to that point, there has to be a correction. So we're going to push the rate up. We want something to happen where a correction happens, and then we're going to grow at 3 to 5%. Now, their tool for doing that is raising the federal funds rate. So if they have to continue to raise that, mortgage rates will go up until we get to a point where supply and demand levels are more in alignment with each other. And then at that point, we'll see interest rates start to come back down and equity growth to start happening at a normal rate, which some people would say 3 to 5, some people would say 4 to 7%. So long-term projection, we can see that we probably are going to see rates go up a little bit more, and it's going to be harder and less affordable to make a move. But there are some ways around that. And so, you know, I think getting with an agent that can talk to you about different loan products, what it's like to refinance, at what point we could refinance, and really finding the deals that are out there. Because right now, we still have sellers that are in the market that have a need to move, a need to change their location, a need to downsize. And we're going to see that there is still some inventory out there. There are deals to be had on some desperate sellers, and sellers that don't have to sell certainly can market their house in it with a strategy that fits what they need. I think that strategy plays into more now than ever before. You got to have the right strategy, whether you're a seller or a buyer. If you're a buyer, you need to be educated on all the tools you have, all the different loan products you can get, and where you might find a nice pocket where you could get that reduced price right now. If you're a seller, you want to be focused on, number one, what product you're bringing to the market. You want to capture as much as of that demand that's out there as possible. And I think that having the right marketing plan for your home to make sure that you're really putting it in front of and effectively marketing it and putting it in front of all those buyers is going to be wildly important moving forward. You know, I'll leave you guys with this, and this is a great little stat, and it's if you don't do your research on who you're working with, whether you're a seller or a buyer, and you're not looking them up and looking up their background, their past sales, if you're a buyer and you go and buy a house, you have a 68% chance of walking into a marketplace where you're going to have an agent represent you who's sold less than 2 homes in his career. Who you work with matters. At the Smith Group, we have a great team of individuals with a great beat on the market. We've got all the tools in place to help you strategize, which I want to stress, strategy is wildly important right now in today's market. So give us a call and let's sit down. Let's have a consultation meeting on what the right moves are for you and help you make the right decision for you and your family going into 2023. My name is Jason Wright. I'm with the Smith Group, and I'm looking forward to working with you.